everyone. On behalf of Nirmal Bang Institutional Equities, I welcome you all on this 2Q FY19 earnings call of CCL Products India Limited. So from management side, we have with us Mr. Srishant, the Managing Director, Mr. V. Lakshmi Narayana, the CFO of the company, Ms. Sridevi, Company Secretary, and Mr. P.S. Rao, the Consultant Company Secretary of the company. So we'll begin the call with the opening remarks on the management, and then we'll open the floor for Q&A actually. So over to you, sir.
Thank you for the introduction. The group has achieved a turnover of 292.11 crores for the second quarter of 2018-19 as compared to 296.63 crores for the corresponding quarter of the previous year. And the net profit is 47.18 crores as against 33.42 crores. The EBITDA is 77.62 crores and the profit before tax is 65.59 crores. For the half year ended 2018-19, the group has achieved a turnover of 586.89 crores as against 545.94 crores for the corresponding period of financial year 2017-18. And the net profit is 86.64 crores as against 60.46 crores. During this quarter, the company has executed some more profitable contracts from Vietnam, which has also contributed significantly to the bottom line. Regarding the SEZ plant, we have commenced trial productions in this quarter 3. And we are applying for the necessary permissions for the certifications by the end of this quarter. By quarter 4, we are expecting to receive all the necessary client approvals as well as the certifications, and we are targeting to start commercial production from 1st April 2019. In light of the above, we are also revising our guidance for this year from the earlier 10 to 20% bottom line. We are increasing it to 15 to 20% bottom line. The top line is still expected to be in the range of 5 to 10%. That's it. We can go to the questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Jignesh Kamani from GMO Group. Please go ahead.
Hi, Srishant. Just want to have a view on the volume growth both at the India and Vietnam. I think India we were running almost full capacity. Despite of our EBITDA grew by around 20%. So volume growth was very healthy or product mix was far superior?
Actually, yeah, India we were operating at full capacity, but we started doing a little bit more of small pack orders in this year. Which is also contributing to further value addition. So there's a little bit of margin expansion also that we are seeing because of that. Next year onwards also, we are planning for a new packaging facility, and we are going for more value addition. Instead of just predominantly today we are selling mostly bulk coffee. That's the majority of our business. But we're moving more and more to small packs, and this makes the business also more sticky because we are supplying to supermarkets and brand owners in their brand name.
So same client is shifted to more, or you can say small pack order, or we are getting new client which lead to better?
We are getting new clients. There's some business that we've been trying to get for a couple of years that has translated into orders now. So, and some of our existing customers are also buying some more additional small packs from us.
Understood. So that kind of profitability is more sustainable.
Yes, that's correct.
Sure. Yeah. And the volume, how is the volume growth in the Vietnam?
Vietnam, we are on track. Almost about 15% or so was the volume growth that we have seen.
Okay. And just on the new freeze-dry unit, based on our interaction with the client, what kind of utilization we can achieve in the next year?
Next year, we are targeting around 50% utilization.
With whatever the margin we used to report in past on the freeze-dry, or there's a dilution in the margin?
No, same. Similar margin. Yeah.
Okay, thanks a lot.
Thank you. The next question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi, sir. Congrats on good set of numbers. The idea is to understand the underlying commercial economics of the business. Couple of quarters back, we were struggling to see profitability vis-a-vis the expectation that we had set. This year, the first half, we have seen the profitability has sharply improved versus the expectation. I'm just trying to understand, is it the underlying business for the base which has improved, wherein, we had certain concerns that globally more capacities are coming and which could be exerting some kind of profitability pressure? Or is it more?
Yeah, I understood the question. So, if you go through the earlier transcripts also, one of the things is last year and the year before that, we were focusing mainly on the volume growth. Especially last financial year, we were focusing mainly on the volume growth. And we were adding new customers as well. And that was supposed to be the foundation for getting new customers on board. And today, now we are realizing that whatever strategic decisions we have taken last year, we are reaping the benefits from this year onwards. Some of these customers whom we've supplied in bulk last year, they've established us as a consistent supplier, and they've started giving us small packs as well, which is also one of the reasons why we are seeing a growth this year onwards.
Okay. On the same, is there a way to understand, how much percentage of the business is right now still in bulk and how much is in small pack?
Around 70% will be the bulk business in India, and about 30% of the India business is right now in small packs. Vietnam, almost everything is in bulk.
Okay, so there is a high degree of profitability which can be expected if more clients are getting shifted towards the smaller pack.
Yes, that's correct.
And for them to shift to small pack, what is the advantage they get?
For them, they're buying from only one single person. Earlier, they used to buy from resellers. We used to supply to resellers in different geographies. They used to pack the product, add their margins, and then supply. By buying directly from us, they're getting an advantage of buying directly from the manufacturer. So, depending on the volumes that they're buying, they'll get a price advantage also buying from us as opposed to buying from any reseller, third party.
Okay. And one last question on freeze-dried facility which is coming up for commercialization. In past, whenever the new facility used to come up, we used to see a jump in volume but a dip in margins or the profitability. Yeah. Should we expect similar kind of outcome for next 2 years when the facility will be available, the new facility?
Not really. Not a significant dip in margins or anything like that. If you look at Vietnam also, when we started utilizing the plant, initially we had less than 50% utilization because we had introduced spray-dried coffee in Vietnam, where there was already a lot of competition. Now in India, we are setting up a freeze-drying plant where the demand is much more. And freeze-dried is a significantly more premium product. And we are introducing products which are in freeze-dried categories. There are several subcategories of more premium products that we are introducing. So the main purpose of setting up this plant also was to expand our offerings in freeze-dried, not just the plain vanilla type bulk freeze-dried that we used to manufacture, but now we can do a wider range of products as well, which is one of the reasons why we're quite confident that we can maintain the same margins.
Got it, sir. Thank you.
Thank you. The next question is from the line of Ronak Marjaria from Edelweiss Asset Management. Please go ahead.
Yeah, good afternoon and congratulations on good set of numbers. So if you could throw some light on our retail domestic operations, so what has been the revenue this quarter?
Yeah, this for the first half now, I think we have done about 40 crores as revenue from the domestic market. We have last month we have launched Malgudi and this brand for a 3-in-1 premix. We've started placing the products in the market and everything. Our projections for this year is about 100 crores, and this quarter 3 and quarter 4 will give us a clearer picture as to the response of the products in the market. Our current projections are at 100 crores, so we'll know towards the end of quarter 4 what we are really able to achieve.
Okay, and out of this 40 crores, like roughly 50% would be directly the B2C and the balance would be to B2B?
Yes, that's correct.
Okay. And sir, are we having any plans for any further expansion on the Vietnam side in the next 1 year or 2?
Vietnam, we are doing a little bit of line balancing to enhance the capacity because this year we'll be reaching that optimal utilization in Vietnam. So we need some additional capacity over there. So with a minimum amount of investment, we can do some line balancing and increase the capacity to around additional 3,500 tons by next year.
Okay, so that would be ready by the end of FY20, you're saying?
Yes.
And roughly how much would it cost us?
Around $8 million is what we are projecting on the higher side, actually.
Okay. Thank you and all the best.
Thank you. The next question is from the line of Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Just wanted to understand this proportion of bulk versus small pack. What was this, say, a year ago in the India business?
A year ago, I'd say maybe around between 20 to 25% in India was in small packs.
Okay, which has moved up to 30% then.
Yeah, around 30%. And now with the domestic market volumes also increasing, that's likely to go up even further going forward.
Okay. And just looking at some historical data from the company's quarterlies, so the last 2 years actually saw a very significant spike up in the EBITDA margins during the December quarter, which has, kind of happened in the September quarter this time around. So just wanted to understand if there is any seasonality involved that we should, kind of know of.
Actually, for our type of business, you have to look at it on a year-to-year basis only because customers sometimes they may want to place orders in one particular quarter as opposed to another quarter. So in quarter 2, this time we've actually executed some more profitable contracts that we would have otherwise executed in quarter 3 or 4. So we are, that's one of the main reasons why we've seen a substantial hike this year.
Sure. So it might have kind of got preponed the more profitable orders.
So whatever guidance that we are giving, we look at it on an annualized basis. And since we have more or less good visibility for the whole year, we are able to give a more or less accurate guidance.
Okay. Got it. Yeah. Thank you.
Yeah.
Thank you. The next question is from the line of Akhil Parekh from Elara Capital. Please go ahead.
Hi, Srishant. My question is on the raw material front. We are seeing the coffee prices are hitting all-time low right now. So how much the improvement in margin is because of the small packs or the change in the product mix versus the declining trend in the raw material prices?
Akhil, as you know, our business model itself is such that the green coffee prices really don't impact us because we've already sold the coffee beforehand. We cover on a back-to-back basis. So whether the prices go up or down, it really doesn't make too much of an impact. Where it does make an impact is the EBITDA percentage appears to increase because your turnover is coming down.
Okay.
That's the only impact.
Okay. So what you're saying is basically the realization, the flattish top line might be because of the decline in the realizations.
Yes, there's almost a 20% decline in green coffee prices compared to last year. In spite of that decline, we have managed to maintain more or less a similar turnover, which clearly shows that we've done more than 20% additional volume growth also this year for the first 6 months.
So directionally, the EBITDA per ton would have improved, right? That is what I'm assuming.
Yes.
On YY basis.
Yes, it has.
Okay. My second question is on the utilization level for first half at India and Vietnam. So should we be able to continue with 95% 100 or 95% in India and around 75 to 80% in Vietnam by end of FY19?
Yeah, around between 90 to 95% after factoring in the shutdown period for maintenance and everything. 90 to 95% is what we are doing in India, and we're going to continue with the same thing. Vietnam, we are seeing an increase in utilization. Around 75 to 80% is what we are targeting this year.
The maintenance shutdown you're saying is going to happen in the second half?
The maintenance shutdown is already completed in the first half.
Okay. How many days it was?
About 20 days.
20 days, okay. My question is on the private label side. I've seen some TV commercial in the south, right? So are we planning anything on ad spend in Hindi media?
Yes, actually we are. I think, no, not in Hindi medium. We are doing mainly in the south. So only in the 4 states, Tamil Nadu, so in Tamil, Kannada, and Telugu. These are the 3 languages that we are doing the ads in. We are targeting only the southern states because this is where we are selling Malgudi, the filter coffee. North India, the filter coffee sale itself is negligible, so we are not targeting that market. If we start targeting that market, our ad spend amount also will increase substantially, which didn't make sense at this point in time.
Got it. So we should not expect Malgudi in D-Marts or Big Bazaar in Mumbai maybe?
That I'm not too sure because most of the bigger chains, they're asking us to keep the products there. And our offtake in the D-Marts and all is actually quite good. The response has been so good, they're asking us to do the private label as well.
Okay. And just last question in terms of the expense. Last time we had maintained that whatever we are going to earn from CCL Private is going to go in the ad spend, ad and promotion, plus 10 crores from the CCL, right?
Yes.
Do we stay with the guide?
We are 100% on track for that. There's no change.
Okay. And sorry, one more question if I can squeeze in. In terms of margin, obviously there has been a sharp improvement. For first half now, almost 24% of the margins we are hitting versus 21% last year. So any color on the guidance and the margin guidance side?
No, so frankly, this is only, it appears to have increased. Our per kg realization is still the same. It's only because of the raw material prices coming down on a percentage basis, it appears as if we are getting a higher margin. So this, as you know, when the green coffee prices go up, then this margin percentage as such will also come down.
Got it. Okay, got it. Thank you so much for answering the questions.
Yeah.
Thank you. The next question is a follow-up from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi. The follow-up question is on the small pack line. I guess in the starting commentary you made a note on the packaging lines which you're going to put on additional.
Yeah.
Could you highlight how much is the capex which will be involved out there and how it will change the revenue profile or the earnings profile?
Yeah. So we are setting up an agglomeration and packing unit by next financial year. The investment is approximately around $12 million.
This is in India?
In India, yeah. This is outside the SEZ in Sulurpet. The SEZ is in 30 acres of land. We already purchased some additional land also 4 years ago. So in that balance portion, we're setting up this unit.
Okay. And for this, we will not be requiring additional throughput from, let me put it in this way. So whatever revenue or the output that we generate out of Chittoor plant, we'll push it through the the new unit for agglomeration and packaging and may garner more value-added products out of that facility?
No. So the SEZ plant is a separate unit that is catering to the export market. The unit that we are proposing to set up is a DTA unit because of the increased volume in the domestic market mainly. Now the number of SKUs that we have introduced in the domestic market also has increased substantially. Apart from this, even our export orders for small packs have been increasing. So keeping these two requirements in mind, we are setting up a DTA unit outside the SEZ unit.
Got it. And this $12 million capex that we are going to do, this will be able to suffice what kind of quantity that we produce in India? Like say 20,000 ton is the capacity.
Yes. So what we are going to do is we are setting up an agglomeration capacity of about 5,000 tons. And the packing capacity also will be similar, around between 3,000 to 5,000 tons is the packing capability that we're going to set up. So there's no additional product that will come, but there'll be value addition that comes in because of this investment.
Okay.
It'll be a more or less fully automated packing line.
Okay. And what would be the incremental realization that we should be expecting?
There should be an incremental realization, maybe around additionally maybe 5% more at least we should get because of the small packs.
Okay, and for additional 2% or 3% expense, is that the way?
Yes, yeah, something like that.
Okay, and last question is with regard to INR depreciation. The existing numbers that we are seeing, are we having any kind of INR depreciation benefit in terms of better realization and better profitability?
Because we are buying our raw material in dollars and we are selling our finished product in dollars, there is a natural hedge for at least 70% of the product cost is raw material. So there's a natural hedge over here automatically. Only in the balance 30% where we are doing the conversion aspect, over there will be a marginal benefit that we are getting.
Got it. Sorry, I have one more question. Globally, a couple of quarters back when we used to discuss, there used to be a worry about the incremental capacities which are coming up on spray dried, which were putting up pressure on the realization. Has that scenario changed, moderated, or has worsened? Any kind of update on that?
Additional capacities were always there. There was more than 50% excess capacity in the past, and even now that's the same situation. There are new capacities constantly coming on board as well. But one thing what even the people who are building new capacities are realizing is that just having a production facility is not sufficient to generate sales. When you're working with coffee brands, there's a lot of R&D that's required. There's a lot of product development that's required. All this is quite expensive and time-consuming. On top of all this, you need the right partners in multiple geographies who can help introduce your products in these markets. What we have initiated more than 20 years ago, the relationships that we have built more than 20 years ago, we've been able to get consistent repeat business because of that. So whatever we do, like even last year what we had done was, in light of the additional competition or not, we were trying to be more aggressive in the market, and we were successful in adding more volume to our business. Now we are able to take that relationship to the next level as well. So this is an ongoing process that's going to be there, and going forward also we're not expecting the competition to reduce. We have multiple advantages because of the plant being 20 years old, and we also have a lot of product development that we have done. We have economies of scale. So there are multiple advantages that we have that is enabling us to be competitive. And going forward also, because we are constantly expanding our capacities also, we don't see any problem in selling more volumes in the future as well.
Perfect. Thank you. Thank you, sir.
Thank you. The next question is from the line of Ankit Jain from Mirae Asset Management. Please go ahead.
Yeah, hi. Hi, Sishan.
Hi.
I mean, you have mentioned that India business volume growth has been at around 20% this quarter?
India, no, more than that actually, because last year we had done about 46 crores in the whole year. This year, in the first 6 months, we have done about 40 crores.
No, I am not talking about consumer business. I am talking about B2B business for the standalone entity for which revenues are flat this quarter. Yeah, on that. So, there the volume growth is around 20%?
The volume growth is not 20%. I think in the range of maybe 10% or so.
Okay. Second bit, if I look into, in your balance sheet, and the entire increase pertains to CWIP, capital work in progress, is towards this freeze-dried capacity?
Yes, the capital work in progress is towards the freeze-dried.
Okay. So, as on September end, does the entire amount has been spent pertains to that plant?
Whole of the amount, capital work in
progress. I'll just ask our CFO to answer this.
Yeah, it has been met, all the capital expenditure.
No, the whole amount what you show in the balance sheet, it will meet that expenditure for the one which is asking.
Can you just repeat the question?
No, so what I'm trying to understand is as on September end balance sheet, the entire amount pertains to that plant has been capitalized or not?
Has it been capitalized?
No, it is still under the capital work in progress.
Yeah.
And since we have not yet declared the commercial operation.
Okay, sure. Got it. So basically, interest and depreciation pertains to that is still sitting in CWIP. That is still not.
Yeah, interest is part of the capital work in progress under that, under pre-operative expenditure.
Okay. Got it. And after this plant, what is our capex requirement now? Because just now you mentioned $12 million towards the agglomeration unit, and apart from that, some bit we are also doing in Vietnam. So what would be the total capex, let's say, in next 1 year?
That 8 million is what we projected for improvement of line balancing at Vietnam, which may add around 3,500 tons capacity. And another $12 million, which we are intended to go for investment for agglomeration facility and automized packing facility in India, adjacent to in our DTA unit at Chittoor.
Sure. And anything else apart from, let's say, this 20 million, 12 plus 8, maybe some small maintenance capex might be there?
Maintenance capex will be there as part of the regular process, but that's not much actually.
Sure. Okay. Thanks and all the best.
Thank you. The next question is from the line of Ritika Garg from Equitas Investments. Please go ahead.
Good afternoon, sir. So I wanted to know regarding your B2C business. So we are planning to grow at 100% in FY19.
Yes.
And what do we project for FY20?
End of Q4 we'll be able to answer that question, because today we've just done the product launch. We're placing the product in the markets and all. The initial consumer panel tests, we got positive response. But actual consumer offtake, what we will be able to achieve, we'll only know at the end of Q4. At that point in time, we'll be able to give a more realistic projection for next year.
Okay. And for freeze-dried, the margins are better in Vietnam or in India?
Freeze-dried we have only in India. The freeze-dried manufacturing is there only in India. In Vietnam, we have only spray-dried manufacturing.
Okay, so the margins are better in Vietnam or in India?
In Vietnam, because the technology that we incorporated in Vietnam also is state-of-the-art technology, and we are able to offer a much wider range of premium products from Vietnam. So strategically, we set up the plant over there also. We had done a substantially higher investment in Vietnam also on day one, so that we can get better realizations over there.
Okay. And so our current Vietnam capacity utilization is 75 to 80%?
This year we are targeting, 75 to 80%.
And what was it in FY18?
Around 60 to 70%.
Okay. And so could you also throw some light on like the global production of Robusta and Arabica and their prices?
So global production-wise, today there are a number of factors which are there, which is resulting in the fluctuation in prices.
Okay.
There is a bumper crop this year in Brazil as well as Vietnam, which is why the coffee prices have been under pressure for the last couple of months.
Yeah.
But in the last week or so, the market started recovering mainly because of the Brazilian elections.
Okay.
And the party that is expected to come into power is supposed to be more pro-business, and also that's why the real started strengthening as well.
Okay.
Because of which the green coffee prices also started going up. Brazil being the largest producer of coffee in the world. But now they're all there.
Hello.
Ladies and gentlemen, we request you to please stay connected. There seems to be a disconnection from the management line. Thank you. Ladies and gentlemen, thank you for being on hold. We have the management reconnected. So over to you, and we have Ritika Garg still awaiting for a response. Thank you.
So continuing from where I left off, so the green coffee prices, now there's new news in the market saying that there's a coffee rust that's impacting the crop. Ground level reality is a different story altogether. So at this point in time, the coffee prices are under pressure. Next year, we'll know only after November, when the new crop comes, what the realistic situation is going to be.
All right. And so we sell our products on online channels also, right? Through Amazon and... So who are our competitors? Because our price points are pretty low compared to the others, right?
Actually, it's comparable because our MRP is almost, in fact, in some cases, higher than the competition also.
Okay.
And as far as the products are concerned, end of the day, as far as coffee is concerned, our quality is something which is significantly different from what our competitors are selling.
Yeah, I've actually ordered your coffee.
Okay. So whether it's better or worse is something I cannot comment on because it's an individual choice.
Right.
So what we have seen is a lot of people have given us positive feedback saying that they've liked our coffee as a good alternative. So that's one of the things.
So who would be our direct competitors?
Our direct in India, you have a duopoly that's mainly Nestle and HLL.
Yeah.
So that's Brew. So these are the two brands which are selling in India right now. So significant third competition in the market is basically us.
Okay. So we plan to take market share from them?
Actually, we're planning on growing the market also. We are introducing a lot of new products. There's almost a 15 to 20% growth of coffee consumption within India. India is today only less than 20,000 tons is being consumed in India today. If you look at the US, they're consuming 80,000 tons. Japan consumes 35,000 tons. So the potential for growth in coffee consumption is huge in India, provided we can also introduce products at the right price point. We have recently introduced this coffee, which is a 3-in-1 premix at a 10 rupee price point. So that's a good alternative as a hot beverage to even tea.
Right.
So we're not just targeting coffee as our competition. We're looking at the hot beverage market.
Okay, but then, and where do we see B2C business as a percentage of our total revenues?
B2C business today will be less than 1-2%.
Right.
But we are hoping that it will grow consistently. From, like, if you look at our domestic business from last year to now, our B2C business has grown more than 100%.
Right.
So in the first 6 months itself, compared to last year, it's grown more than 100%. So somewhere, something we seem to be doing right. So hopefully that trend will continue.
All right. And what is our advertising spend for FY19?
This year we are targeting around 20 crores for advertising.
20 crores. Okay. And I realize, estimates that you gave for FY19, you revised it downwards for PAT to 15 to 20%?
No, upwards. Earlier I said 10 to 20%. Now
now it's 15 to 20%.
15 to 20.
All right. Thank you so much.
Thank you. The next question is from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on a good set of numbers. Sir, 3 questions. One is on the currency benefit, which you said like around 30% of it is open. So when we go for the contracts for the next year, do we need to pass on that complete benefit to the customer, or how does the pricing work then?
See, it's not necessary that we have to pass on, but depending on whom we are targeting, if there is another Indian supplier who is supplying to that particular company, and if you want to be more aggressive, if they are passing on the benefit, we may also have to pass on. But usually that will not always be the case because we are doing large volumes across the world. Okay. The portion of people that will be competing from India is again very small. It's global competition that we should be more concerned about. And this has really, the currency devaluation is one thing I wouldn't say is really helping us that much also because currency has devalued in other countries as well. Yeah. Because the dollar has strengthened, it's not only us getting the benefit, it's others who are getting that benefit as well. So that competition as such is still there.
Okay. So net basically that means then, so my point was that whether are we pushed by the, so it's more driven by the market pricing and based on which our decision of passing on or not depends.
Correct.
Rather than the customer pushing us for the...
Yes, that's correct.
Okay. Secondly, if I look at our sequential numbers on the standalone, and so I'm just trying to infer, if I look at June quarter and September quarter, our sales was 218 to 214 crores.
Okay.
And if I look at the coffee prices sequentially were on an average down by 10%.
Mm-hmm.
So which means that we got a benefit of around 8 to 9%, which then should be basically the improvement which we got from the smaller packs along with the volumes.
Yeah.
Would that be a correct inference?
Yes, that's correct.
Okay. And other than this 130 crores of capex, do we foresee any other capex for 2021 types or?
No, not right now. 2021 is a different story altogether. We are focusing on certain customers at this point in time. If those volumes come through and the demand for spray dried increases substantially, then we might go in for additional expansion in Vietnam by another 10,000 tons.
Yeah.
But at this point in time, we are planning maybe 2 years to 3 years down the line.
Oh, so this 130 crores is the immediate capex, which so $20 million is the immediate capex which we have.
Yeah, by next financial year, we'll be spending this.
Okay, and lastly, when we say we are doing the smaller packs, I'm just trying to understand. So the throughput of the core plant, which is the 20,000 tons, that does not get.
That remains the same. And by doing agglomeration also, it's just conversion of the product into granules. So out of that 20,000 tons, approximately around 14,000 tons is spray dried coffee. Out of that 14,000 of spray, we are already agglomerating around 3,500 tons. But now that the demand for agglomerated coffee is also increasing, we are enhancing the agglomeration capacity by another 5,000 tons. So it is value addition, but that we are getting now.
Okay. But the number of cycle changes in order to create the blend and all, that will remain the same. So only the packaging, rather than selling the complete 100 tons, we are selling smaller packs.
Yes.
That's the only difference we are doing.
Correct.
Okay, sir. Thanks a lot.
Yeah.
Thank you. The next question is from the line of Abhijit Akela from India Infoline. Please go ahead.
Yeah. Good afternoon. Thank you so much for taking my questions. Just wanted to seek a couple of clarifications. One is your export incentives for the quarter, if it's possible to just help us on that, how much that was?
So incentive, I just...
12.5 crores. The quarter one, it is at 9 crores, and the quarter two, it is at 12 crores. It's 21 crores is the first half year.
Okay, got it. And from a full year perspective, do you expect more to come in the second half?
Yes, we will get more in the second half as well.
Okay. And then just on the freeze-dried market, I know that, there has been some sort of concern that a lot of capacities are being added. Besides yourself, a few other companies have announced some additions. So just wanted to get your thoughts on the health of the market there. Do you see the demand and supply sort of balancing out at the end of all of this, or is there some risk of maybe moderation in freeze-dried margins?
One, with respect to the demand increasing, there is definitely an increase in demand because this is like a cycle. A couple of years ago, when freeze-dried capacity was not sufficient, the prices of freeze-dried became significantly higher. And people, they weren't willing to, the end consumers were not willing to pay that kind of a high premium. They started transitioning to spray-dried. Now that capacity started getting built from last year onwards, that transition is now taking place more towards freeze-dried now again in the market. And that's also one of the reasons for next year. We've already started doing contracts. More than 50% of our capacity for next year is already pre-sold now. I'm talking about the enhanced capacity. So that's also one of the reasons why we're quite confident that we'll be able to do some additional volumes. At least a 50% utilization of the new plant will be there from next year onwards, next financial year onwards. And margins also, we're expecting to continue with the same margins that we have this year, because the correction has already taken place from last year to this year.
Okay, that's great to hear. And just last thing was, in terms of the total debt taken on for the project, for the Qtr project, how much is it out of this 360 crore capex?
180 crores is the loan component.
Okay, understood. The rest is all funded internally.
That's right.
Right. And last one quick thing, the PAT guidance change we've made, we've increased the PAT guidance to 15 to 20%. So that is largely because of a higher percentage of value-added products. Is that the reason?
Yes, that's correct.
Okay. Thank you so much and wish you all the best.
Yeah.
Thank you. The next question is from the line of Akhil Parekh from Elara Capital. Please go ahead.
Hi, Srishant. Just two questions. One is on the US FMCG company. Last quarter we were speaking about. We were expecting some kind of traction over there. So because the e-com trader has shut down his facilities. Are we seeing any positive traction from that company?
We are, we've already started supplying to them, but again, small volumes as of now. Going forward, it could go up, but one of the things that they're asking for is again small packs. So we wanted to build some additional capacity of small packs before going after that business.
Okay, so is that the reason why we are building up the packaging facility in India?
Not only because of that, but that's also one of the reasons.
Okay. So we will be supplying it from India for that particular US-based client?
Yeah.
Okay. In tonnage, would you be able to share like how much, maybe like in percentage wise, how much you are supplying right now?
See, the tonnage of what you mean?
For that particular client, for that particular US client.
No, right now we are doing again small volumes, less than about 300 or 500 tons.
Okay. And that we expect around maybe 2,000. That is what I think.
Yeah, it has the potential of going up to 2,000, but that again depends on multiple factors. So it's better not to comment on that right now.
Okay, got it. And just one last question in terms of the margin differential or the per ton differential between the aglo versus the spray dried, how much that would be?
I'd say about 4-5% more we'll get for the aglo compared to the spray dried.
Got it. All right. Thank you so much.
Thank you. The next question is from the line of Dhiral Shah from Asit C. Mehta. Please go ahead.
Yeah, good afternoon, sir. Congratulations for the good set of numbers. So what is the margin gap between small packet and, bulk packet?
Frankly, that's a very difficult question to answer because it depends on customer to customer. Usually, it can range between either 5% to even 20 to 25%.
Oh, that's much of difference.
Yeah, there's a huge variation depending on customer to customer, depending on the markets that we are targeting. If you're taking part in tenders, it'll be a different costing. If it's a brand owner, it'll be a different costing. So all these factors are there.
Okay. And so secondly, sir, we are spending around $12 million for adding 5,000 tons of agglomeration capacity, right?
Agglomeration and packing, automated packing.
Okay, so this would be adding 5,000 tons, right?
Yes, 5,000 tons.
Okay. Thank you, sir. That's it from my side.
Yes.
Thank you. The next question is from the line of Anuj Jain from Value Quest Capital. Please go ahead.
Hi, Shashank. Thanks for the opportunity. I have few broad questions. Number one, who are our main competitors in the instant coffee contract manufacturing space?
There are several people across the world. In Brazil, you have Kesiki, you have Kokum, you have El Cafe, Olam. Earlier we had Super. Now there's another Chinese company called Jiahi as well. And in India, you have almost 5 or 6 manufacturers who are there. So across the world, every geography that's growing coffee, there are a lot of manufacturers who are already in the space.
Okay, sorry, except Olam, you mentioned 2-3 names. Can you just tell me again, I missed the names?
Kesiki in Brazil. El Cafe in Ecuador.
Okay.
You have, who else? China, Jiahi, that's King Flower.
King Flower.
Yeah.
And approximately what kind of capacities these players have?
The highest capacity, I think, will be in the range of 25,000 tons.
Okay, and
he has around between 20 to 25,000 tons.
Okay. That was useful. My second question is, in last 5 years, the incremental revenues which we have, we were doing around 650 crores in 2013, and we did around 1150 crores in 2018. So for this incremental 500 crores, can we have a split of revenues coming from new clients versus business from these existing clients?
Most of it is from Vietnam. The additional increment is from Vietnam, and all the Vietnam customers are new clients. As in, they could have been buying from us in India, but it's additional business that they're giving us from Vietnam.
And purely new clients, the new names which we have added in last 5 years?
New customers, we constantly add at least about maybe 10 to 15 customers every year, out of which volume guys will be maybe 2 or 3 people that we keep adding every year.
Okay. And how is our sales effort sales effort is broken between the existing clients as well as the new clients?
Yes, existing clients also keep increasing their volumes with us. In some cases, if you're adding a new customer in 1 year, the second or the third year, the volume with that particular customer can go up by even 50-60%. Because initially they'll just want to test us out. Like last year, the new customers that we added, we did some basic bulk products with them, vanilla type products, which was not very complicated. Now that they have that trust and confidence that we can supply whatever they want within the time frame they want, they've increased the orders to small packs and other products with us now. They're going up the value chain now.
Okay. And one last bookkeeping question. Any particular reason for increase in personal expense in this quarter?
Personal expense, I think our CFO can answer that.
That's essentially the commission that has been accounted for. The proportionate commission payable to the whole-time directors.
Okay.
We have made a provision on constant basis. Instead of taking it upon approval, we are spreading it over a period of month-on-month basis. Quarter to quarter.
Okay, understood. Okay. Thank you. That's it from my end. And best of luck.
Thank you. In order to ensure that the management is able to address questions from all the participants in the queue, we request the participants to please limit their questions up to one. Should you have a follow-up question, we request you to rejoin the queue. We move to the next question from the line of Lakshmi Narayana Ganti from SBI Cap Securities Limited. Please go ahead.
Hi, Srishant. Just one question on what explains the increase in demand for agglomeration-based coffee?
Pardon? What?
Why is demand for agglomerated coffee rising?
Why is it increasing? So, in India, if you look at most of the products that are being sold today, like you have two main products. One is pure coffee, which is being sold in agglomerated form by Nestle. And the second is spray-dried powder, which is being sold in chicory coffee blend by Brew. What we are doing is we have introduced a Continental Extra, which is an agglomerated spray-dried coffee. And our volumes of this product have also been increasing in the domestic market. So based on the projections that our domestic team has given us, we needed to double the capacity by next year. So that's one significant reason. Apart from that, we have our other export customers also. There are certain specific markets. Once we started doing more of small packs, most of the small packs, the customers are asking us to supply with agglomerated coffee. Earlier, when we used to do in bulk, we used to give spray-dried powder. Agglomeration used to be done by the repacker or reseller, and then they used to sell to the customer. Now, we are only doing that agglomeration at our end and doing the small packs and supplying to customers as well. One thing you need to understand is global market, if you look at, out of the 750,000 ton instant coffee market that's there, around 250 to 300,000 tons will be Nestle. And they are right now selling everything in agglomerated coffee only. So anyone who's competing against Nestle also in the small pack business, they prefer to have agglomerated coffee.
Is it that the customer perceives them to be better quality?
Yes, and those, it's just a physical change in appearance. But while making agglomerated coffee, we also do certain processes to enhance the aroma, to have better binding of the granules. So we do some slight value additions. It gives that premiumness. Agglomerated coffee is also called the poor man's freeze-dried coffee. So that perception that it is more premium has always been there.
Okay. And last question, if I may. How much is your estimate of global freeze-dried capacity, and how much in terms of supplies coming through in the next 2 years?
Out of, we're thinking maybe between 150 to 200,000 tons will be the freeze-dried consumption today in the world. And at this point in time, there is just sufficient capacity to meet the demand. If the freeze-dried mix is increasing, then automatically the capacity also has to increase. Because of the high capital cost, there are not many people who have come into this field, but now they're slowly entering.
But you sense a differential growth rate, a slightly better growth rate for freeze-dried?
Yes, we are seeing a much better growth rate because people across the world also, they want more premium products. And not only in freeze you have a lot of sub-categorizations which are there, more premium products under the freeze-dried head. So these are the areas where we're seeing more growth actually.
Great. Thank you and good luck.
Thank you. The next question is from the line of Nidhi Agarwal from Angel Broking. Please go ahead.
Thanks for taking my question. I have this question on second half. We have seen a 40% increase in profits in first half. And so are we seeing any slowdown in second half?
So second half, one thing we are being a little bit more conservative because we have executed, like normally for us, customers, they decide when they want us to execute certain contracts. So some of the more profitable contracts have been executed in Q2 itself.
Okay.
So which is also one of the reasons why we are expecting more or less similar trend as what we have done last year.
Okay.
Q3 and Q4. We are focusing on certain contracts which we will get a little bit more clarity on in the next couple of months. If these things pan out, then our guidance will be hitting the higher numbers basically, closer to the 20%.
Okay. Another question on, B2C business. We are seeing a lot of discounts in Continental products. So is this initial phase, or are you selling at loss, or we will stop seeing such one-on-one free kind of deals?
No. So the reason why we are giving that initial like buy one get one free offers and all this is as an introductory offer. We wanted people to try the product at least once, which is why we've introduced with these kind of offers. These offers are gradually being phased off. Even buy one get one free, there is no loss as such. There's no significant margin that we may have, but we're not facing any loss over there. Going forward, the offers are also getting revised. In fact, from this quarter onwards, we'll be seeing the revised packs in the supermarket shelves as well.
Okay, sir. Thanks for taking my question.
Yeah.
Thank you. The next question is from the line of Vikas Kasturi, an individual investor. Please go ahead.
Yeah. Hi, Srishant.
Hi.
My question is, about 2 years back, the annual report mentioned that we have about 200 blends. Now, you say that we have about 1,000 blends. So is it possible to come up with an additional about 800 blends in such a short period of time?
Yes, because we have increased our portfolio of offerings. We've added 3-in-1 products into our product mix as well. There are so many permutations and combinations which are possible. We've started offering these products to different customers. Even like a customer may want a sweeter coffee or a darker coffee or a lighter coffee. It could be any kind of requirement that the customer gives us. That has resulted in us creating new products for those customers. So we have created these products not only in like earlier we had plain vanilla type spray dried coffee or freeze dried coffee. Today, apart from the usual Arabica, Robusta blends, we have specialty coffees, we have organic, fair trade, rainforest, we have 3-in-1, 2-in-1, we have microground coffees, we have cold coffees, cold brews. So the list goes on, and now we've also introduced some tea products as well. So there is no product in coffee that we cannot manufacture today. There's no other manufacturer in the world, you name it, even the biggest brand it can be, nobody in the world has the kind of flexibility to make the number of products that we are currently making. So we can basically match any product manufactured by any manufacturer anywhere across the world. So that is the capability that we have built up over the last 25 years.
Okay. Thank you, Srishant. That's all I had.
Yeah.
Thank you. The next question is from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah, hi sir. Thanks for the follow-up. Just one question. On Vietnam, I think in one or two calls back, you had mentioned that this tax holiday which we were getting, it could be extended for next 5 years. So any updates over there? Or?
Yeah, as of now, we did receive an extension, so that same tax holiday is continuing now. There's no, as per the current government policy, we got this extension. So every year, I think we'll have to keep applying for this.
Okay, so the end deadline is not sure.
They haven't given a deadline yet.
Okay, thanks a lot.
Yeah.
Thank you. The next question is from the line of Anuj Jain from Value Quest Capital. Please go ahead.
Hi. One last question. In the last call, you had spoken about the new overseas client who is buying continental coffee from us and selling overseas. Any update on that relationship?
Yeah. So that is whatever volumes that they've taken, that volume is still being sold in these markets. I don't want to get into details about the specifics here.
Mm-hmm.
But yeah, we're seeing a good relationship getting built over there as well.
So, do you want to tell about the tonnages we have supplied, any incremental volume?
No, this is again small. If it's branded business, again, for export, it will be only like one container at a time. So it's very, very small.
Okay.
Yeah.
Thank you.
Yeah.
Thank you. The next question is from the line of Manu Agarwal, an individual investor. Please go ahead.
Hello.
Excuse me, this is the operator. Mr. Agarwal, may I request you to... Yes, you can go ahead, please.
Hi. Regarding the 150 crore capex that we have given for the next year, how much debt are we looking to raise for it?
There's no additional debt that we are looking at raising. I think mostly through internal accruals itself, we should be able to fund this.
Okay, thank you. That's it from my side.
Thank you. We take the last question from the line of Anant Jain, an individual investor. Please go ahead.
Thanks for the opportunity. Srishant, two questions here. First question is, you said that our plant, the new plant at Qtr2 would be operational next year, next financial year. So do you see any tax differences, because that is an SEZ and currently our plant is not in SEZ. So do you think there is a tax differential between what we do here, what we export from the current plant at Dugirala versus Qtr2?
Yes, there will be, because we have a 5-year tax holiday from the SEZ. Only MAT has to be paid by us.
Only MAT has to be paid by us. So we would also be moving some capacity from Dugirala to there. Would that be a fair assumption? Because of better tax?
Actually, no, I wouldn't say that we'll be moving capacity over there. But if there's any maintenance or anything that we have to do in Dugirala next year, so that flexibility we are keeping open.
Okay, and then there's another thing which is more of a bookkeeping, is that we have a total other comprehensive income, which is significant for, if you look at this year, it is at 25.44 crores. So if I look at total other comprehensive income, that comes to, total comprehensive income comes to 112 crores, and it has that 25.44 crores of total other comprehensive income. What is that?
The comprehensive income, it is relating to it is the consolidated which you are seeing the number one.
Right.
And the two is that we have the investments in Vietnam subsidiary and Switzerland subsidiary and Singapore subsidiary, wherein at the time of investment, the rupee versus and the present rupee, there is a appreciation.
Okay.
So that amounts to the 5.44 crores in this as of 30th September.
Okay, got it. Great. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, with this, I now hand the conference over to Mr. Abhishek Navalgund. Please go ahead with your closing comments, sir.
Yeah, thank you to all the participants and the management of CCL Products for answering all the questions patiently. So I'll just hand over the call to you, sir, for your closing remarks. Thank you.
Yeah, on behalf of CCL, I would like to thank the Nirmal Bang team and all the participants for taking part in this conference. So I think we will talk to you again next quarter. Thank you.